Hi, everyone, and welcome back to another episode of Unlocking Venture Capital. I'm here with Mitch Brooks, the founding partner of High Street Partners. How are you today, Mitch?
I'm doing great. I'm doing great. Thanks for asking. What about you?
Yeah, good. Thank you so much. So, please tell us a little bit about your fund and about how you came to found your fund.
Yeah. High Street Equity Partners is a seed stage venture capital firm, dual headquartered in Washington, D.C. and Little Rock, Arkansas. And a little bit about us. We make early stage investments, into post revenue emerging technology companies. Our focus is to look to make investments in companies that are in emerging innovation hubs across three sectors: health tech, clean tech, future of work. And for a lot of reasons, our strategy is in strong alignment with our thesis, which maybe we can unpack a little bit more here.
Yeah, no, absolutely. I want to dig into a little bit more about your thesis and why and how you guys are looking into the types of founders or the types of geographies that are often overlooked.
That's
So
right.
that
That's
is
right.
not something that is usual because we use buzzwords like innovation hub, which is talking about a certain kind of place or a certain kinds of group or those kinds of things. So how
Yeah.
do you strategize your team to kind of look around that? And what do you think that you're seeing as you're going about this strategy?
Yeah. Yeah. The thought process to a great degree is that when you look at the coast, when you look at California, New York, Massachusetts as examples, there are a ton of early startups being created and built, and there's a ton of VC and money that's concentrated in those areas. And there it's just pure economics as far as what happens when you have situations where it's like heavily dense and consolidated in that way. And the reality is that if you're an entrepreneur that's based in Northwest Arkansas, it's remarkably hard to get venture capital funding.
Yeah. Yeah.
And oftentimes those folks either have to relocate or it's just a lot of travel associated to get VC funding. And what we've seen, I'll say within the last 10, 15 years,
Mhm.
is that there's been an intentional shift around that. And there's entire ecosystems that have been coming together from state and local governments to universities to even VC firms like us that are setting up shop in our local or homegrown economies
Yeah.
and looking to be really intentional about being able to have successful startups in those places. And, I think what you'll see and notice is that VC firms like us, we look to take our subject matter expertise, the past performance, and we look to think about based on our network and relationships, how can we exist in the market in a differentiated way where we can be value added to these entrepreneurs, but also we're very clear that it's going to take, you know, growth investors, Series A, Series B, Series C investors to also get involved even after we make these seed stage investments. And so it's just as much us making those early investments and rolling up our sleeves to be helpful, but also nurturing relationships around the country that feel just as interested and passionate and supporting and accelerating these type of companies as we are.
That's really great. And there are of course lots of VCs who are within the innovation hub that stay there just forever, but also have this like innate fear that if you are not in certain kinds of places, you might have trouble closing rounds.
That's
And I'm
right.
sure that you have had to deal with, certain
That's
kinds
right.
of challenges related to being outside of these major cities. And how have you come about, to overcome these challenges? And what have you and your team learned from, going through these routes?
Yeah, I think the reality is if you're going to play in emerging innovation hubs like we do, you have to also form relationships with your downstream investors. And so I think it's deeply meaningful for any founder entrepreneur that's watching this and listening to this. And you look to have seed stage investors that are within your local region or geography. You want to know how they can be helpful to connect you to investors that are downstream for your next round.
Yeah.
And so I think it's equally as important as the cash that we can put into companies and help them to syndicate that round, whether it's a pre-seed or seed round. The great thing is that, you know, you'll do that and you'll be successful there. But it's just as important as once you get those funds and when you hit those metrics and milestones to get to your next round, you have some folks that have cleared the path for you a bit and have made some warm introductions and have really primed the pump. And I think that is a key component to all of this working and getting together. So it's about also the relationships that those seed stage investors have across the industry.
Yes.
And those relationships, you know, ideally or I would say typically take the shape that there are uh, Series A investors that focus on climate, right? And they have a specific focus that's specific to certain industries.
Yes.
And so I think the reality is what you'll often find is that if there's a Series A investor in a particular sector, they would love to be able to have us pre-seed, seed stage investors that understand their investment thesis, that understand their criteria, and can be a pipeline of quality deals.
Yeah, no, especially because, there are fewer and fewer growth stage funds nowadays than there was before. And, of course, they would want to have the best deals from everyone that they could possibly build relationships with. So I think that that is really great. What was it? The founder of Techstar, Brad Feld, always said that the entrepreneurs that are going to solve today's biggest problems are those that are facing today's biggest problems, right?
Yeah.
And so being able to look outside of these other traditional hubs, being able to see lots of different kinds of communities rise up, as you're saying, emerging communities and emerging markets. Are there certain kinds of trends that you are seeing through your eyes that are popping up more now than there was before in the places that you were looking? And what do you think that it's supposed to be telling us?
Hmm. Well, I'm of the belief that uh, when we see companies that have remarkable talent with like really great ideas, and they are they look to take their idea to go into market.
Yeah,
That typically happens within 20 square miles of a great engineering program or university. And so what I'm seeing is that there's university leadership that's taking an active leadership role and what should this startup economy and venture economy look like. And it feels like that a number of folks got the memo on that, and that there's a lot of folks locking arms and coming together to help to make that happen. And I think the reality is that there are companies that emerge outside of I'll say that environment in this space, but the likelihood that it will consistently happen and that you can build an ecosystem around it, there are certain things that folks like to see them in place. And so what I'm seeing is strong conversations with university leadership, with tier one VC firms and looking to attract tier one VC firms, as well as local players. And everyone's coming together and sitting around a table and starting off doing things like pitch competitions and looking to sort of just grow that pipeline. And so off the top of my head, I would say that's one of the things that I'm seeing and we're at the table and we're a part of in a few markets around the country. Um, a- Another thing that I'm seeing um, is, well, I'll actually, I'll stop there. I'll stop there.
okay. I want to
Yeah.
ask you a little bit about your values. So this is something that you and I have talked about offline before.
Yeah.
And one of the things that came up was integrity and action, which is
Mm,
on one of your company values as well. And it's something that is deeply important to me. I've always found that the founders, because a lot of VCs go with the answer of, well, please come back when you have more. And they're kind of
Yeah.
expecting you to come back when you have like a list of things that you have talked about. And then you're kind of put into that position where, you are putting the actions where your words are, right, as a founder.
Mm.
And so that makes a lot of sense. So, in terms of integrity, when I talk about that with founders, that is really what I mean. What do you mean in your words when you talk about integrity in actions to founders?
Yeah. Yeah. Well, I I would like to first comment on sort of the idea that everything we do is principle-based management and it's value-based, right? And to share with you and your listeners, um, we didn't get that just off the top when we were doing our fund formation and rolling things out.
Yes.
We got that by being in market and having different team members and vendors be a part of what we were doing,
Yeah.
and sort of just reflecting deeply around why is this person working out well and this person not.
Yeah.
And I think that when you take a moment to think about that deeply and not just surface level, we started to think about these are the values that we have in common with folks, and that's why things are going really well with some partners or team members rather than others. And so, what I decided was to not just prioritize sort of skill set and or aptitude, but to really look to prioritize first and foremost values, because I think that there are a lot of remarkably brilliant people out here, and we've met them, but they just don't work well. The chemistry isn't there for
Yeah.
what we're doing and what we're building. And so that particular value, integrity and action, it means a lot. I mean, I think there are a lot of layers to that. And so what it means to me and how I've seen it manifest and show up for us is when you say you're going to do something, regardless of who it is, it's a matter of how you show up and do that thing. And are you doing it half-ass or are you doing it with all of your being?
Yeah.
Right. So to your point, when we connect and when we meet with entrepreneurs, we genuinely try to tell them exactly why it's a no for us. And if it's a no because of traction, we tell them and we try to be specific why it's a no
Hmm.
because of traction.
Hmm.
And so I think oftentimes entrepreneurs, and we've heard this over and over, entrepreneurs will get sort of one sentence emails as far as why it's a no. But to share with you, we write a 3 paragraph memo for why it's a no for us. And
And
as a
send it to
part
the
of
founder?
and send it to the founder.
Oh, that is
That's it.
just so you guys know, this is very unusual.
It
Usually,
is.
you usually just get one sentence, if any sentences at all.
It
So
is.
that's highly
Yeah.
unusual, I would say.
Yeah. And we feel as though if you've taken the time, uh, first off, you've met our screening criteria,
Hmm.
and we've both taken the time to have a first or second meeting. And if you've taken the time to do that, then we want to be able to give you specific and detailed feedback for why it's a no for us. And we try to explain like this is for us and how we're in the market and how our fund is constructed. So this isn't gospel. So take it for what how it's helpful and what it's worth. And we've heard back from a lot of founders that have said to us like how deeply meaningful it is. And I think it's meaningful when you have founders that you informed them that you were going to pass and why, but
Right.
those founders go about spreading your name to their network, and
Yeah.
they'll tell folks even though they didn't invest in me, this is deeply meaningful, and I think you're in alignment with them. You should talk to Mitch and the High Street Equity Partners folks. And so we see like the positive benefit and momentum coming from it. But most importantly, this isn't a gimmick. This is value-based management and how we think about running the
I
firm.
would never think that it's a gimmick, considering I know how much time this would take. Nobody would invest this kind of time for a gimmick. Um, that is so interesting, and I do hope that that's a lesson that more new VCs would take, because where you spend your time and where you're spending your attention is so narrow and
Yeah.
so specific. And because that is what your performance is based on when you're
Yeah.
on those kinds of teams, right? And
Yeah.
the way that you're treating the no founders is so different than how you've described. I came back from a very inspiring event where one of the
Okay.
speakers, he was an LP in many funds, he said, and people came up to him. So he was in a room with 70 fund managers,
Okay.
most of which he has said no to. Okay,
Okay.
and they still, because he's been in his position for a long time, and they came up to him, and some of them have said yes, some of them have said, some of them have received yes, some of them have received no over the years, and they go, the way that you say no and the way that you are helpful, people only say positive things about you when you're not there. And I was like, who is this? Also, I had to Google him. I'm like, who is this guy? And I'm like, because coming from a family office fund, we don't have LP investors,
I
right?
gotcha.
And so
Yeah.
having that
Yeah.
relationship was something so interesting to me. And then you are literally the second person who's ever explained that how you are saying no to someone and providing that extra help, that extra value is something that you are taking your own spare time to do, really, and something that you have implemented throughout your team, just like the way this gentleman has. And so I find that to be very, very inspiring. And
Yeah,
the
I
more
appreciate that. I think it connects to what you said at the top of our session. And you are doing this podcast, you're doing what you wish you had in the market
yeah,
when you were starting out in your
yeah,
career in the space. Very similarly, we acknowledge that if we were on the other side of the table, we wish we would be able to get feedback. And
yes,
in addition to that, we understand and acknowledge that most of the, not most, but many of the entrepreneurs coming across our desk are entrepreneurs of color,
yes,
and they're entrepreneurs that are going about this and don't necessarily have the same friend or family network
hmm,
to
yeah,
be able
that's
to
true.
sharpen the sauce. They're going through it.
Yeah,
And so we're acknowledging all of these dynamics and the reality of these dynamics. And so yeah, this is what we would like to see if we were on the other side of the table.
yeah, yeah.
And
And
so we're
that's really important. And the way that you also explain the dynamics of the entrepreneurs that are coming to you guys, another thing is also that only certain kinds of entrepreneurs would feel comfortable even pitching to certain kinds of funds as
that's
well.
right.
And
Yeah,
that
that's
is
true.
really important because there's a lot of missed opportunities that are already few and far in between otherwise in this industry. And to your point, there are certain entrepreneurs of color who wouldn't be able to just get a family and friends and angel round right off the bat in order to springboard them to that next round. So having a lot of early stage funds to be able to even pitch to and get feedback from and work with is a new and unique opportunity that wasn't available not that long ago.
That's right. That's right. Yeah. Thank you for calling that out.
Um, One other thing is that, another one of your values is authenticity is your superpower. So that is something I personally struggled with as a
Yeah.
founder, as a VC, just normally, because when you're pitching, for example, as a founder, you are trying to put your best foot forward, right? And
Mhm.
you have memorized all of these things because you want to make sure that the VC gets all of the facts, gets all of the hard numbers, gets all of the traction, all the things that you've really worked for, right? And then you have only a certain limited amount of time with people, and we know that as VCs, we read pitch decks pretty quickly. I would say faster than they would write it for sure. But how are you drawing out that authenticity in such a short, constrained amount of time as an investor? I find that to be difficult on both sides, to be honest. And I don't know how to best give it and receive it in a way when there are these kinds of constraints that are very prevalent in our industry.
Yeah, I think it starts at the top of the call. And it starts with how you set the tone for the conversation and for the meeting. Um, and it's very easy to tell if folks are tense and uptight, but they're
Yeah,
doing
yeah.
their best, and oftentimes they're doing a great job as they go through it.
Hmm.
But even if they're doing well, I'm the type of person to say, like, at the top of the call, I want to talk to you about this, and I want you to be comfortable and relaxed, and we're having a conversation. Like I acknowledge how we go about this business is uniquely different,
Yeah,
and it's going to be up to our performance to prove this out, right? After a 10-year mark. So far,
yeah,
so good.
yeah.
PitchBook recently
Whatever your
released
DPI is.
That's right. PitchBook recently released data around vintage years and how top performing funds are performing around the vintage year. So I'm happy to report here that based on PitchBook's research and data, we are in the top percentile for our vintage year.
Yay!
But I acknowledge it's still very early, right?
Mm,
And this needs to be proven out. But it's my intent for me to have conversations with folks and not interviews. And the reality is that uh, post investment, that's what it's going to look like anyway. So I'm just trying to move that timeline up,
yeah,
right? I need to be able to have a relationship with you where you're comfortable to tell me the good, the bad, the ugly post investment.
yes.
I need to be able to have a relationship where you're not looking to hide things or you're looking to dress things up.
Hmm.
And so I think if I can look to set that stage early on where like whoever you are as an authentic person, whether you may be quirky or whether you may sort of be, it may look a certain way or feel a certain way. I want us to be able to do that early and me not necessarily meet your representative. And
Meet
so,
your doppelganger.
but that's right. That's right. And so, I think it's a matter of leading by example
Yeah.
when we're talking to founders, and also it's a matter of, you know, looking to encourage it and inspire it out of folks. Um, and we think that it works well and it works effectively. And I think, it's also about us, taking our own medicine regardless of what podcast episodes I'm doing or what panels that I'm doing, it is deeply meaningful to me for my investors, as well as my mother, as well as my wife, as well as my childhood friends, to be able to say, like, that Mitch is consistent and he's remarkably authentic, regardless of what rooms he's in. He's always himself.
I love that. And I think that all of those people that you've mentioned in your world are extremely proud of what you have accomplished and what you
Thank you.
continue to do in terms of your impact on the world.
Thank you. I appreciate that, Cindy.
Well, thank you so much for coming on, Mitch. I really appreciate your presence. I appreciate you spending this time with us. And thank you, everyone, for joining in on another episode of Unlocking Venture Capital.
It was been great. Take care.